As I mentioned, China's GDP per capita is $4,000 today. By 2015, it's going to be 9,000. After that, just think about one thing. If China's GDP per capita rise to $10,000, can you imagine that China is still producing those toys, still producing, those clothing, shoes, hats, those very low-end, labor-intensive products? I think more likely those jobs will be shifted to China's neighboring economies. China will no longer be able to compete in this area. So the question is that, is China able to move up to the high-end manufacturing sector? The chart on the right tells you, how low China's R&D investment as percent of GDP. So it's actually a very challenging job for China. So even if we assume China can do a very good job in moving up the value-added ladder, it won't be able to solve the unemployment problem for China. Take a look at the chart on the left. Take a look at employment in manufacturing sector. You look at China, over 100 million people are employed in the manufacturing sector, mainly because China is actually engaging in labor-intensive manufacturing industries. Look at the other 5, Germany, Japan, Korea, US, UK. How many employment do they have in manufacturing sector? In total, 38 million. In other words, even if China successfully develop its high-end manufacturing and take 100% market share from these countries, how many jobs it can create for China? 38 million. Will that be enough? Look at China on the right. Look at the primary industry, agriculture. How many people are employed here? 300 million. 38% of the workers employment are in rural area, are in agriculture. They only produce 10% of GDP. That's why they are poor. People here are poor. In order for China to grow, its income without creating larger income gap, the only way to get this done is to move people out of this area. They need to find jobs in secondary and tertiary industry. And that's actually exactly what happened in the past 30 years. Based on the historical experience, we think in the next decade, this industry, primary industry, will migrate out 106 million people, workers, not people, workers. Look at the secondary industry, mining, manufacturing, and construction, how many jobs they can add. Actually, in the first 5 years, it added a little bit, but in the second 5 years of the next decade, you can see even this sector is going to lose about 60 million jobs, mainly because the industry is moving to the high end, less labor intensive. But on the other hand, service industry can only create 71 million jobs. 71 million jobs in 10 years is a big achievement. 7 million service jobs every year. Think about China every year, how many jobs they can create in the past decade? 9 to 10 million. 7 million, you get 7 million new jobs in the service sector. It's not an easy job. Let's say they can make it. Still, you can see there is a 50 million job gap in job creation in the next 10 years, especially between 2016 to 2020. So that's going to be a big problem for social stability, for a lot of things. One solution to that, as I mentioned, is that you can actually keep those people in rural area. But the problem with that is this income gap will be even wider. So you can see today's situation in China is already, in terms of the Gini index, it's already actually worse than the world average. These policies also against the government's goal to reduce income gap. If you look at China right, you can see that Eastern, in terms of GDP per capita growth, actually Central and Western area is growing faster than Eastern. So actually we are seeing a narrowing income gap. The minimum wage increase you heard last year, this year, is actually trying to reduce the income gap. But what it means, that means that China is losing its competitiveness in labor-intensive area even faster. So that's the challenge. let's look at some other challenges. Let's look at the resource side. I believe you heard this a lot. Look at electricity consumption per capita, China. Only 1/5 of the US level, 1/5. But think about the total electricity consumption in China, almost the same as US. US is number 1, China is number 2. Look at this number. It's very easy, I think, for China to double this. China is, highly, growth-driven, highly investment-driven, manufacturing-driven. This number can easily double once income increase. That means if it doubles in the next 10 years, we are going to see this number. China is creating another US in terms of electricity consumption. China on the right, metal consumption. For aluminum, zinc, copper, China is already consuming 30, 40, 50% of the world consumption, even though China GDP is only 10% of global GDP. In per capita level, China's level is still half of those developed economies. In other words, we get 50% jump in GDP per capita use. It's very easy. But what that means? It means that China's demand will increase a lot for these natural resources. It's going to push up those global commodity prices even higher than today, I think, even though I think there's a small bubble in the commodity price today, but it's going to be even higher, much higher than today, 10 years from today. But what that means China will probably suffer the most because China's growth model is manufacturing-driven, investment-driven, which is very energy-intensive, very resource-intensive. So that's going to create constraint for China itself. Another issue, CO2 emission. China is already number 1 in CO2 emission, total emission. Per capita level, China is so low. China can easily double it. That means we are going to create another China or US in 10 years' time. There is no charge on CO2 emission today. What if there is a small charge, even if it's small? It's going to create more burden for China's growth model. So that's something I think we need to keep in mind. That's the challenge that China is going to face. I think the end of the game is a collapse in investment. I think a lot of people talk about investment bubble in China. I don't think so because I think China model, growth model today is actually, it's more like a global factory. So they are producing for the rest of the world. So they need to invest in more industrial facility, and industrial manufacturing sector needs better supply chain support. That means we need better infrastructure. So China's investment in infrastructure should also be higher than a service economy only, I would say. So in some sense, I think there is a reason behind this, but that, whether this model is okay really depends on whether China can still maintain its manufacturing-driven growth model. So if you look at China left, China's investment is already larger than the US, even if the economy is less than half of the US. China's investment in GDP is nearly half of GDP. What it means that I think in the next few years, we are still going to see investment continue to grow, probably at close to 10% rate. That means in 10 years' time or 5 years' time, we are between 5 to 10 years, we are going to see this number to be probably 4 to 5 trillion. By then, it's going to be, if China loses competitiveness in the manufacturing sector, no more investment in those areas, I think it will be very difficult for China to even keep this 4 trillion US dollar investment. That means investment growth will come down to probably 0, possibly negative. If that happens, what that mean? 50% of GDP decline to come to a 0 growth. Today they are growing at 10 to 12%, contributing 5 to 6 percentage points to GDP. If that becomes 0, 5 to 6 percentage points will be gone from GDP growth. Now we have 9% this year. That means then we are going to only see 3%, 4%. And what if we think about second round effect on consumption, on related areas? So it's going to be even less. So the collapse in investment can become a trigger for China's problem, China crisis. And one more thing it will definitely affect is the asset price bubble. I think we all know about that. I think the asset price bubble will burst because of the investment collapse. But before that happens, I would say in the next 5 years, probably asset price will rise further first. before it declines. There are so many reasons: massive urbanization, rapid income growth, resource concentration, currency appreciation, all these factors contributing to higher asset prices. Most important one, monetary. Monetary growth, M2 growth, 15% every year in a neutral monetary policy. That means 5 years later, M2 is going to double. The money in that society, the deposit in that society is going to double in 5 years. What do you say about asset price? So that's why I think asset price will rise further in the next 5 years and then collapse. So that's going to be, this is a very complicated flow chart. You all have that. Last, no time to lose. The government need to work on this. I think they are actually, they have already laid out a plan in the 12 5-year plan. But even so, I would say it's very challenging. I think very difficult for China to avoid this. So basically, last 2 sentences, what should you do? What should we do? I would say we should take advantage of the growth opportunity in the next 5 years, but be very cautious after that. So that's my advice to you. Thank you.